Are you ready to take your business finances to the next level? I know I am. So let's go ahead, let's dive in and let's talk about business forecasting and budgeting. This will empower you to achieve your financial goals and to start proactively planning for your business's success. Hi there, I'm Jessica Lawrence and I help entrepreneurs take control of their bookkeeping and their finances. So budgeting, forecasting, we've heard these words, but why is this important? Well, it really is important to start proactively planning for your business. So oftentimes what happens is we have a million things that we're trying to handle with our business. And so we're reacting in our business finances. We're acting retroactively instead of starting to look forward and acting proactively with our business finances. And forecasting and budgeting is starting to take the lead with actually being proactive and looking at our business finances instead of just being surprised at the end of the month. All right, so a forecast versus a budget. What do each of these really mean? So let's start off with defining them. So a forecast is really a projection. So it's an estimate that we're making for the future income or expenses of the business. We're really making an educated guess for what we think is going to happen over the next period for our income or expenses. Now, in contrast, a budget is actually your plan for how much you're going to spend. So it's really usually more focused on the expense side of things. And it's you setting a plan for yourself to say, okay, I want to spend no more than this amount. This is my budget for the next period, whether that's a month or, a year, right? So you say, okay, for upcoming May, this will be my budget. When we're talking about our financial statements, we're usually talking about them looking backwards, right? So when we run a profit and loss, when we run a balance sheet, when we run a cash flow statement, it's for the previous period, usually the previous month that we're looking at. Whereas when we're forecasting and we're budgeting, we're looking at the next period, the next month of what we're going to make or spend and what our plan is to try and stay within a budget for that period. Okay, so we're moving from being reactive and just looking at the numbers of what happened for the previous period to being proactive, looking forward. What are we going to probably have with our forecast and with our budget? So to effectively manage, your forecast and your budget going forward, do this proactive financial planning, we're going to use our previous statements. And so when it comes to the forecast, you're going to look at those previous periods and say, okay, well, how much did I make in income last month, the month before that, right? And we're going to use that data to then make our forecast. Now, if you have a cyclical business, it is very important that you have enough of that information to see the high points and the low points. So what I mean by that is I have a cyclical business with my short-term rental business because I have a beach house. And so with the beach house, the income is much higher in the summer than it is in the winter. Surprise, surprise. And so when I'm doing my forecast, I want to keep that in mind. When I forecast for how much I'm going to make in June, it's going to be very different than what I forecast for how much I'm going to make in February. And I want you to do the same thing, to really take into account those different cycles in your business and what that income would look like. Now, same thing goes for when you're forecasting your expenses, right? If you know that there are certain months that your expenses are higher than other months, you want to be taking that into account. Or if, you have a very steady business where your expenses are almost the exact same every single month, you want to look at that too, and you can forecast accordingly. Now, once you have a pretty good idea of what your income and expenses are for your forecast, what you're projecting, right? We're going to essentially call this our base case. So this is your best guess, right? This is your base case of what you think that income and expenses are going to look like for this upcoming period. But then what I also want you to do is prepare a worst case. So the worst case is gonna say, all right, well, I think I'm gonna make this much in income, but what if I didn't? What if XYZ happened? You make some assumptions. What would that worst case be? And then you can adjust the number, if you need a guideline by 10%, 20%, lower that revenue, that income number by 10 or 20% to create this worst case. Or if you have actual data that you can go back and look at for your worst case. So for me, winter months versus summer months, I can lower all the way down to that and say, okay, this is what I think the income is going to be for that period. And just create this worst case scenario as well. And I want you to do the same thing on the expense side, right? So if we guess that our expenses are going to be our base case for expenses, well, what if they were higher for that month, right? That'll be for our worst case. We're going to assume expenses were actually 10%, 20%, 30% higher than our base case. And by doing that, you now have this worst case that you can look at that is assuming a little bit less in income and a little bit more in expenses. Now, there's a very specific reason why I want you to create this worst case scenario, and it is to help ensure your profitability. Because we've done these two forecasts, right? So it's a base case scenario and a worst case scenario. These are both forecasts. Now we're going to budget or create a plan for our spending that looks like our worst case scenario. And what that does for us is when we're planning to the worst case scenario, then when the next month rolls around, if we had higher income than we thought, or we had lower expenses than we thought, guess what? It's all gravy. It's great because we've budgeted to that worst case scenario. So anything that happens a little bit better than we expected will help our profitability, will help our business, and will put us in a better financial position. Instead of having the opposite happen where, you're budgeting to the base case scenario or even further to a much better best case scenario, and then it doesn't hit. And now all of a sudden you're like, oh, now I have more debt than I thought I was going to, or I don't have enough income for the month, right? So we're going to ensure our own profitability by looking forward and budgeting to that worst case scenario. Now, once you have your forecast with your base case and your worst case, and you have your budget set up that aligns with your worst case scenario, you're gonna see how it plays out. So you're gonna go through the month, and when the month is done, you're going to compare it to your actuals. At the end of the month, you're gonna run your financial statements. You're gonna run your profit and loss. You're gonna run your balance sheet and run your cash flow statement. And you're simply going to compare. You're gonna say, how well did I do with my guesses? How well did I do with my forecast? And how well did I do with my budgeting? And you're just going to see, and you'll be able to compare right next to each other the numbers. And then it's simple. You just adjust from there, right? So if you're just starting out with forecasting and budgeting, it's not gonna hit perfectly, especially not in the beginning. So you're just going to do it again. You're gonna do it for the next month. You're gonna create another forecast, another budget, and then you're gonna see what happens and you're gonna compare. And then you'll adjust again and just repeat this process so that you're really proactively planning for the finances of your business. And when you do that, you're going to get better and better and better at it, and your finances are gonna start looking better and better and better. Now, you might be wondering, how do I actually do this? Like, where do I create my forecast? Where do I create my budget? Well, if you're using an accounting software, something like QuickBooks, there is the capability to do some budgeting and some forecasting within QuickBooks. But if you're not, it is just as simple as writing down in a spreadsheet or somewhere, the numbers that are going to align with each of your financial statements. So we know the categories that we're going to report on for our financial statements, for the profit and loss, for the balance sheet, and for our cash flow statement. So just forecast and budget to those same categories, right? And then you'll be able to easily compare right next to each other. Now, I highly recommend using QuickBooks and using the software and the technology to be able to do this. It makes it so much easier. But if you don't have that, just get a spreadsheet and make sure that they all line up. Now, if you're ready to elevate your financial planning skills, but you think you might need a little bit of help with this, no worries, just go over to my website, jesslawrence.com, and check out my courses and services, which are designed to help you with forecasting and budgeting and really taking your business to the next level.